Welcome to another live session. Today is July 17th, 2020. I hope you guys are well. It's a great day to be alive and trading. And because it's such a great day, I'm going to be opening up a cold one. You guys ready? Now, it's not a cold one. It's a nice cold Coke, but I think that's one of the best tasting drinks out there. So, cheers wherever you are in the world. Man, that is good. So this week, like many of the past few weeks, have been pretty easy going, just because the markets have gone from from swinging from one direction to the other to being very choppy and consolidated. It's in a basically ranges, right? We're trading ranges, and the thing about ranges is they're high probable setups most of the time, but you're not going to get those big 70, 80, 100, 130 pip moves that we're used to getting. So this week, unlike last week, we had more trades being entered. We had 4 in total. 3 were winners. 1 was a minor loss of 13 pips. And a lot of the setups we talked about, which you will see when I show you our alerts, are still pending because the markets have just been choppy, right? So let's start off with just the setups we were looking to enter yesterday. Euro dollar short. Okay. Now, most people's biases went from long to short yesterday. You can see what happened. We came to this high right here at 1.14500. If you look to the left, I'll try to pull it up. You see right, look to the left, you can see that was the last significant high we had. And so our thought process was, if we break 1.14500, we will go up to the upside to 1.15. If we reject it, we will probably go short like we have in the past. Now, if you look at what happened yesterday, we got two nice decent rejection candles. This is a bullish inverted hammer. This is a bearish inverted hammer, and that's great. Now, we don't just go based off that. We have to clear some previous lows and highs. And so this level right here, 1.13750, was the level we wanted to go short on if we were to break and close bearish. And you can see my alert is still there. Price did not do any of that. It came here, used as support, and then launched back up. And now it's kind of rejecting this price point, this resistance area once again. So this is what I mean by the choppiness. You're not seeing that clean trend. It's really elusive. So it might show you that, hey, it's going to go short, but thankfully, we have really strict entry criteria. It's so strict that, if you follow it to a T, you can probably win 90 to 100% of your trades. Usually the trades that we do end up losing is when, our entry criteria, we're kind of pushing it, we're kind of bending the rules. But this, you can see right here, all we need is a clear break. We never got it, and because of that, the trade was not taken. So euro dollar, earlier in the week we did get a short from here, right? So if you look, we just took a short from this high, and we got around 25 pips for first take profit, right? So you got this leg move here, and generally speaking, you should be getting at least a move to halfway, right? So what we're doing is, let me put a clean euro chart, and I'll show you the signal. So here's our Discord, by the way. If you're not on it, you're not doing it right. Luckily, to join is actually free, so the link to sign up is in the description of the video. Make sure you join. There's a lot of free content we offer and a lot of paid stuff. I mean, if you look at the VIP section, it's stacked. You're not going to get this type of content anywhere. But if you look at my signals, you'll see, where is euro? Right here. So this was on the 13th, on a Monday, and let's find that price point really quickly. So here you go. This is it, right? So this is the trade idea. We like to, since price was ranging, right, we basically drew this up. Okay, and this was the final take profit we had down here, and the R2R was fantastic on this trade. Look at the stop loss for this trade. The stop loss was 22 pips. That's a very tight stop loss. So 22 pips. And this is how the, roughly the trade idea, how it looked. Alright, something like this. Very, very cute little trade. And so, we got 25 pips, our first target of 113.350. And I always say, that 25 pips is usually guaranteed with the separate strategy. So it went to 36 pips, but we got out at 25 pips, or at least I did. And, those 25 pips are pretty much a guarantee, especially when you're following just momentum, right? Because when you follow inverted hammer, that's a momentum candle. That's one of the most bearish, if not bearish, candles there is. And so when you enter based off that and you're trading with the trend, or at least in a range, you have probabilities stacking on top of each other, right? And so in this case, we got that free 25 pips. And because of the choppiness of the markets, I have only been going to TP1 and getting out. I'm not closing half my position and moving stop loss, because I know the markets, they want to go one way, then pull back the other, then pull back this way. And this isn't a general uptrend where you're making higher highs, higher lows. This is where, for example, you make a new higher high here, but then you go down and clear the previous low and then just jump back up. So, I think Institute Trader, he has a video on our channel covering this as well, the current markets, and he explains it in a different perspective in terms of smart money, and he also notices the choppiness, but I don't think it will last. I'll let you know at the end of the video how long it will last and when I think it will be over. So similar to euro dollar, we're also shorting euro yen. If you've noticed in the markets, wherever the majors go, the minors are going. So wherever euro dollar goes, that's where euro yen, euro CAD, euro NZD will go. Wherever pound dollar goes, that's where pound yen, pound Aussie, that's where they'll go. It's very synchronized. It's almost weird. Sometimes, most of the time you don't have that. You do have it to an extent, but it's just not as strong as it is right now. Right now we have like a 1-to-1 correlation. But similar to euro dollar, here was the euro yen show we took from this 4-hour resistance. Very nice range, and we went halfway through, so you can see our target was, once again, it was 17 pips because the intraday range was very small. So if you measure this intraday range, it's only about 70 pips, and so instead of having 25 pips, I went for the 17 pips just to make sure we get something. And thank God we did, because you can see price went to 121.482, so it came very close to our second target. It was 3 pips away. So for the members that were looking for that 25 pip target, which I do advocate for, that was already met. But people that are looking for TP2 to get more, those people, hopefully they move stops into entry. But this is just how the markets have been. They've been pretty erratic. For example, after this short, price pulled back sharply to this resistance up here, and then it pulled down. We were looking to maybe short from here, but none of the confirmations I was liking because of these 2 wicks down here. So the price pulled back to the resistance and then came back down again and pulled back once again. Now I am bullish on euro yen. So if you see, at the start of the week we wanted to actually long this thing with a target of 124, but it's just never got there. Now finally, when the week is almost over, market wants to move up higher. So we'll see. I'm not really buying that euro long just yet. Maybe euro yen, but until we cross over 1.14500, I'm still kind of neutral. So this is the other trade setup, and then we had euro CAD, which is another great setup that was spoiled by the choppiness. So if we look at euro CAD, let's go to the 8-hour time frame. Here's the signal itself and the chart work. And you'll see why we took this short, because the last significant high for this pair we made back in May. You can see price spiked up to this price point and completely sold off. And once again, price came up here, right? And we had multiple rejections. We had 1, 2, 3, 4. So a day and a half worth of rejections at this level. We had this huge price move down with this inverted hammer. So you can see this inverted hammer came in, and it was a very good trade entry. And so we entered it, and we got our first target. So if we go to the 4-hour. So here you have it. So you have the break, push down, and then price of nowhere just catapulted up. And the reason for this is because euro dollar at this point in time started to gain, right? The euro started to gain on the dollar, and so I knew that we had to pretty much get out at TP1. So this is another trade where where did she go? We already got at TP1, right? So 1.53950. You see how low price went. Price went to 1.53931. So we got TP1, and then price reversed on us. This is because euro dollar started going to the upside, and like I said, wherever the majors go, the minors will follow. And you can see this morning When euro rallied, so did this, and now it's testing that same resistance. So until euro breaks, a lot of the euro pairs are at key 4-hour/daily resistance, and until they break it, it's still pretty mixed on the bias. Even leaning towards short. But this was a sharp move down. In most cases, we would get at least this target fulfilled. But since the dollar is changing its bias every other day, it's not really clear where things will be headed. And then also for transparency's sake, we did have a loss, but it was a very, very small loss, and it was a loss that was worth kind of taking because price ended up reverting back to the upside. So here is NZD, and you can see NZD dollar on the 14th. All right, so let's try to find it. Right here. So I was trying to go short. I did get the inverted hammer here. That's why I wanted to call it short, but it just wasn't far enough below the support. It wasn't just low enough. Usually I want it somewhere here, but I thought it was good enough. So we entered the trade, but then this candle came up, and so I knew it was best for us to get at negative 12 pips because this thing was going to reverse on us, and it did. So thank God, because we would have gotten a loss for that trade if we hadn't. And even then, our stop loss was 60, almost 60 pips. So it was good that we took a 12 pip loss rather than a 60 pip loss. It's important to know when to get into a trade and when to get out. It's a very underrated skill. And so, NZD, I'm still bearish. I mean, this thing hasn't really done much. It's still creating those lower highs consecutively. It just needs to follow through really, and just break these key supports. And actually, although we have this line here, we have created this wick area at the bottom. Right, this week we've created this wick area. We have these wicks here, this wick here, and this long wick here. So now our entry criteria for NZD is actually a bit adjusted, but this just only adds to the probability of the trade. So we need a break below 0.65 thousand, a nice psychological level to take us down. So that was this week in its all totality. Very relaxed week. And then if you look at the pending setups we had, my goodness, look at all these alerts. These are all from this week, and we'll go over them. I do want to go over some pair recommendations. So for people that are on YouTube and Discord, send in your pair recommendations now, and then it's trading related questions, and I'll help you out. Samuel Chittix. My chart is not clear. I hope it is. Maybe it's just the I think you can go to the playback settings and go to 720p. But yeah, so if you're on YouTube, send in those pair recommendations. I know there's a few on Discord already, so I'll get to those first. So Euro Pound, let's go. Euro Pound. Major rally. So wow. This thing is wow. It's had a really nice morning. So Euro Pound. Let's first identify the previous significant high, which is up here, and then we can see we are well on our way there. We probably have around 60 pips left to go to that target. You can also see earlier in the week we made a wick up here, right? And this is a pretty interesting price level. So if I mark that, you'll see currently price is pulling back into retesting that exact price point, right? So here we have two levels in mind. Here's the significant high we want to target if we go along, and then here's that wick where price is randomly wicked out of its way. There's no support in this area. If you look to the left, there's no support, right? No recent support here. So for some reason, price wicked all the way up here, pulled back down, and then it surged earlier this morning above it. Currently on the 4-hour time frame, we're coming back to retest this area. So on Sunday, if you do trade Sundays, but for me on Monday, I'll be looking for a bullish candle off this level, either a bullish hammer engulfing. Like this candle is perfect. This one right here. I'm trying to show you that. This candle is absolutely perfect, right? No to the top, a big body, long to the bottom, and you just launch up. So we get something like that, we can definitely take a long with the first target being this significant high. Okay. Now, if I remove some of these old levels, we can pop to the daily and see if there's any greater levels beyond where we're at. So let's see. So yeah, so on the weekly you can see, oh my, that's a lot of momentum. That's a bullish engulfing candle. The weekly, we are in an uptrend. So this is a significant high right here. And then if you look to the left, you can see these two wicks up here. If you look to the left again, you can see, you know, this kind of resistance here. So instead of just targeting this, I'm going to target a nice mid-term level, which is these wicks right here, right? Instead of going from here, right, targeting this and target this, and then if we get this, then by all means we can target this huge wick up here. But so we definitely have the momentum, and if we look at this, you might be able to conclude that pound dollar will also be bearish next week. So on the daily, you can see the kind of trading range we're trying to satisfy here. If I simply just remove this line, and you'll see the daily range we're trying to satisfy. So let's do this, right, and look at this. Here it is, and I'll make this black. So here's the daily range. Here's the bottom support. We used it once, twice, pulled up. Here's the resistance. We're trying to make that people like to call it double top W, whatever you want to call it. That is a pattern that we're kind of satisfying here. So I think price will be pulled to this level. Again, we're 60 pips away, and so depending on where we get entry, we may have a 40 pip TP1, 50 pip TP1, or 30 pip TP1, whatever the case may be. And then if we break that level, we have this one up here. So euro pound, that's a very nice setup. Thank you for recommending that. And you can see, if you're wondering where my stop loss would be, so let's say we get entry, get an arrow. Let's say we get an entry somewhere here. Okay. Let's say we get an entry somewhere here, just above this candle. Right, so our take profit and stop loss looks in like this. Okay, let me squeeze this in, and here you go. So here's TP1, okay, and the TP1 will be around 40 pips away, which is fine. And then if we do break above this level, which we haven't all quarter, if we do break above, we could start looking at these targets. We'll move our stops into entry once we get above here, and then have a risk-free trade to the upside. Okay, our stop loss, it's fine where it is right now, but just in case it does come to this previous low, extend it just a bit below. Okay, so our stop loss would be around 40 pips. So 40 pips stop loss, which is pretty typical for an intraday trade or / swing trade, and so that's not bad either. But I do believe if we get the momentum on our side with this bullish engulfing or hammer, we will get TP1 for sure, at the very least. So this is what we have, a simple trade idea. Let's see if the markets are a bit more trendy next week. Right now it's just it's like a high school girlfriend or boyfriend that doesn't know what they want. They just flip flop every other day. It's just going one way, going the other. So hopefully next week things start finding a trend, but it all starts with the dollar, which we'll talk about in a bit. Next we have CAD Yen. With a CAD Yen swing perspective. Okay, so let's see if they're usually, if there's no swing trade, then you can't really give a swing perspective. Let's see. If you want a swing perspective, I'll have to probably go to the higher time frames and do a top-down analysis. So let's see. So we still have the support zone right here, right? We have all these wicks, price action down here. So here's our support zone, nicely drawn. We're in a downtrend from the higher time frame. You can see even dating back to 2015, right? Since then, we've been in a downtrend. This is a downtrend. We had a mini bullish relief, but then we started a downtrend again. If you're a fan of trend lines, and you just need visuals to see the downtrend, here is your visual for the downtrend, right? The lower highs connecting. We are making lower lows as well on the bottom. So one might say this is a channel, and actually I'm a very big fan of channels, because if you trade within the channel, you're trading with the trend, and I don't know what's wrong with trading these days. Right, so here's our channel. It's not a textbook channel, but nonetheless, it's not bad. It's not exaggerated. So we did get a nice bounce off support slash the bottom trend line. We're going up, and so based on this, and if you look at the monthly candle, you may have a wick fill. So what happens is this candle could end up filling this wick back up to the top trend line, and then from there take a short. So right now on the longer time frame, I'm looking to buy, right? Just because of this channel, we do have a kind of a duty or responsibility to fill out this move to the upside. Okay. Taking a look on the weekly, obviously the bias can change once you go from week to the daily. On the weekly, I'm gonna plot my levels down, so my support and resistance. So here's a major near-term support for CAD yen, right here. Right, see support here, wicks here, support here, support here, support here, support here, and then we'll look at some resistance as well. So that's fine. Resistance is up here, but we're not even close. So I'm not going to draw that. Okay, it's fine. Now I'm looking a bit mixed because we've pulled up to the support we just drew, right? This blue line we pulled up, and price immediately rejected it. So that's a bit of a kind of alert if you're looking to go long just yet. And then here's the the consolidation on the daily. So the daily can draw a trend, a resistance up here. I'm actually gonna use the horizontal array. So here's our resistance, and then at the bottom, here we have some support, right? A lot of wicks below the support line, but nothing has really budged lower. So based off this, what I think will happen, and we trade this pretty often. This is a consolidation setup where you have, right? So this is a consolidation. This is what usually happens, and I've seen it before. Maybe other traders can attest to this. So usually when you have a move up, right? So here's your move up, and these are setups that were our bread and butter. So you have a move up, right? And then you have price surge back down. Okay, so if you measure this surge back down before the consolidation, I'm just going to measure it from wick to wick, right, around 350 pips. If you measure that move, what usually happens is when you break out consolidation, especially from the bottom, you tend to have a similar move down, okay, like that. So from here, consolidate, accumulate contracts, whatever you want to call it. Then we breach the support and we make that move down. And now this is a blue support zone we drew before we even noticed all this, okay? So it all aligns, it's all very interconnected. You can see this was back during the peak of the pandemic, during the first wave, where CAD yen just completely melted, even gapped down. So this is a point in price where we had a lot of activity. We spent a good half of the first 4 months of the year just in this area. So price is looking to go there. We just need a break of this level. That's all we need. And to be safe, we can take a break on the daily just to be very, very safe, because price has wicked very deep below this support and it wicked back up. And so on the daily, for us to get a very nice solid entry, I'm gonna be looking at these two wicks. You see this wick here, this wick here. I don't really like that either. And then you can see these two wicks here. I don't like that at all. So to get the best entry, this is where we're gonna be looking to enter. So once we break 77,800, we will take that short. And so I'm gonna adjust our take profit. Oops. From there, okay? Now this is gonna do two things. So let's say we have so this is our consolidation box. Let's say we break below it, okay? And now the box has a 79,500 is the top of the consolidation box. The bottom is at 78,369, okay? So it's around a 115 pip consolidation zone, okay? So let's say price breaks out of that box. The reason why we enter here is because price can break out, okay? go to this level and then just jump back up. Jump back up. And it has done in the past. You can see price came here, tapped this level, and just launched. So if we wait for the break of this level right here, right? If we break this level, I highly doubt that price will pull all the way back up. I highly doubt it, right? Unless the markets completely hate us, but that's the best bet. So please wait for the break of 77,800 if you're looking to take this as a swing trade, because this is a swing trade. I mean, this is around 300 pips. That might take around 5 to 6 days to play out. So that's definitely an option for next week. But until we break this consolidation and this rut we're in, the markets aren't going to be doing much. So Euro NOK. For those who are on YouTube, if you have any trading related questions, send them in, or any pairs you want me to look at, send them in as well. Euro NOK. So here's the example of the consolidation. So it's been a while since we've talked about this pair, but remember last time I drew this consolidation box, and if I just extend it over, you'll see that we got a break on the 15th of July. Okay. Now usually when you have a break of a consolidation box, you have momentum, and although it might not seem like much, you just measure how much price dropped. It dropped around 150 pips, right, just from this break consolidation box. Since then, it's pulled back up, and I believe it's trying to retest this box. But I am bearish on Euro NOK, right? We are in a clear downtrend, and because we have broken out support as well as a consolidation box, I do think this is just a retracement, retest candle, and so watch out for this price action. Either we reject from here and go lower, right, or we go up to this this level at 10.65 thousand. We reject that, and then we go lower. Okay. I have a target of 10.46 as a near-term target for this pair, maybe for next week, but that's what should happen. Okay, so I'm still bearish on it, and yeah, even the exotics, which are known to really move, have been consolidated, which is very, very, very weird. USD CAD. And so here's another pair we've been waiting for, and talk about consolidation. You can see since the 11th of June. Today is July 17th. So for 5 weeks now, USD CAD has been stuck between this level, 1.36800, and 1.35 thousand. Okay, between these two levels, just stuck, not doing anything, and it has made a bootleg, head and shoulders pattern. This is a left shoulder, a head, and a right shoulder. We were waiting for the neckline to break all week. We have an alert down here, still active. Did not happen. It's just playing ping pong between these two levels, and it's if you're a scalper, this is probably perfect conditions for you. You can see just bouncing from this level down to here, bouncing back up, down to here, bouncing back up. If you're a scalper, this is pretty nice for you, but for us, mainly for me, I'm not too interested in scalping. I like to set trades and forget about it for a few hours, but we're still waiting for this trade. So USD CAD is the same bias because price action has not changed, because price action isn't doing anything. It's a complete bore, right? This is a daily time frame, by the way. So now if you head over to the weekly, you'll see that the weekly is just as ugly in terms of price action. You have long wicks going in both directions. You have a long wick here, a long wick there, a long wick here, a long wick there, a long wick there. Both sides, they're just wicks all over the place. Obviously, the long-term trend is still down, right? We haven't even cleared any of these significant highs up here, so that's why I'm looking for the head and shoulders continuation down, but this pair is snoozing. Anyways, let me check on YouTube. Get to those people. This looks good. Hopefully the chart is clear now. So let's see what else people have. FX Brub, Euro was so boring, thought 1.15 was going to hit. Yeah, you're telling me. I thought 1.15 would hit too. Oil. Jamal says, want to play RP. Play what? That's the question. Texas Hold'em? Want to play what? Checkers? Chess? Oil. Jamal, let me know what game you want to play. I am a gamer. Oil, bullish. Yep. So here is oil consolidating at its peak. Consolidation at its peak. Yeah, I'm bearish right now because this level we're having a hard time breaking it. $41 a barrel. That's the level. It's 41 flat. We are having a pretty tough time breaking it. We made a wick above it just a while back on the end of June to 41,500. Coaxing me hiccups. But this thing has pulled back, came up again, and it's been, these are our daily candles, right? So this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We spent 10 days within arm's reach of breaking the resistance, but we couldn't. And so that's either, a sign of, this level will give away at some point, or that the buyers will get out and the sellers will take over. But you have to see something interesting is, despite this rejection, earlier in the week, earlier last week, price didn't have any momentum to go all the way down to this kind of support area. So for oil, I think a lot of it's all, we had an OPEC meeting. I think a lot of it's fundamentally based. Russia and Saudi Arabia are still clashing, and then sanctions, all over the world. It's just a mess. So I think when you're looking at oil, at least right now, it's all fundamental. At the start of the year, it was technicals, and we had just beautiful oil shorts. If you want to believe me or not, but we were part of the shorts that took this thing all the way down. We were very, very well on our way to getting negative prices, right? I think we got it maybe somewhere here, and then when prices crashed, I believe we just missed that. But those are volatile times, anyways. But since then, it's been a lot of fundamentals, right? If you just compare price action, so if you look at the price action here, right, especially these recent days, and you just compare it to beforehand, right, this is a nice clean trend, right? There's no random pushes up and then drops again. Nice clean trend, right? Even here, a nice clean uptrend, and then finally you see here you have a huge wick, and the price takes out these significant lows, and then the downtrend turns, right, to reversal. You go here, nice clean uptrend, price clears significant low, you have a nice push down, price clears significant high, you have a nice rally up. So we don't get those nice clean trends like this or this anymore. Now price is very, very congested, right? You can see it's very squeezed in. So part of me is telling me that this thing is willing to break out, and I think it will. For example, if you look, the next place to target is these highs up here, which is at $48 a barrel. What? No, here. Right, so $48 a barrel. That's probably the next target in line. The last significant high before we completely just melted, right? So the last significant high before it free falled, really. So U.S. oil, we need a break above 41.50, which is the high we made back in June to take us to the upside. So I'm still bullish. I just think if you're looking to go long, you're just gonna be in for a headache. But if you're a swing trader, you can really just enter now, have this drawn up, and then completely forget about it like this. Huge stop loss. We also have a huge take profit, and then look at your account maybe 3-4 months from now, and you'll see a big 20K profit. that's how it can be sometimes. So that's why I advise traders to maybe get 2 different accounts. So I have a swing trading intraday account. The reason why is I don't like to see my swing trades go against my intraday trades, because in the back of my mind I do correlations and all types of math, and then I just overcomplicate the trading. So set and forget US oil long. Obviously now is not the entry point, but I'm just saying if you are a value investor and you just want to enter a trade in the commodities, oil long is not bad. Okay, you can also just wait for 41.50 to get clear like this, and then take a better trade with a tighter R2R. Here's a 2.84 R2R. So either or option is great. I do think this squeezing underneath resistance is just a kind of a clue that price is ready to break out. It just needs something, a big event. I don't know what it could be. 2020 has been full of surprises, but whatever it is, it needs to just push this up, and I think it will. So we have a target of 47.90 or just 48 flat for U.S. oil. Maybe by the end of the quarter, definitely by the end of the summer, that's for sure. Okay. Any other questions? Let me know. I might look at BTC one last time, and XPX, and then I'll send it off. Okay. So okay, BTC. I think everyone's cracking a cold one. BTC. Let's take a look. Not this one. No. Here you go. Still short. Yeah, still short for BTC. You can see, yesterday's candle was a inverted bullish hammer. Today's turning into a bearish hammer. The price has not broken this trend line dating back to 2017, the high we made at 20K. And so because of that, I'm still bearish. But it's in a standstill. I don't know what it's waiting for. Maybe some of you crypto fundamentalists could help me out, but I'm still bearish. I'm only entering short if we break 8,500, and if we do, we should have a nice sell-off, potentially back to 4,800. Okay. SPX. So the stock market is just going crazy right now, and I gave some really good picks in our stock market channel. Hopefully you guys took it. Also, by the way, guys, we do have channels for gold and oil now. Okay, so let's take a look at gold this week. Profits. So there's a 50 pip winning trade for gold this week. So because of the amount of providers we have, there's always going to be a trade. The U.S. stock market, we do have members sharing stuff in here. So here's my account, and this was a while back, but it's up 44%. Today it's up 62%. So this number is 62, and the level, things I took, they were all the vaccine companies and 5G. So if you're looking to know which ones I took, send me a message on Discord. Now SPX, here's the simple analysis, and you can see it's in profit now. So we went into some drawdown. We almost got stopped though, but then price has pulled back up. Mind you guys, I have a target of 3,500 for long term. Okay, the first target is 3,250, and we are almost there, ladies and gentlemen. And if we get to 3,500, your portfolio will look beautiful, like absolutely beautiful. Again, right now in the 3 months since I've entered the trades, I'm up 62%. That's a lot. If you do the math, that's around 20% per month. And if you know a Forex trader that's making 20% a month, let me know. Because there's not many, right? So even with, you can make a lot of money in stocks. When trading conditions aren't ideal in Forex, there's other markets to be played in. And plus, when you invest in stocks, it's usually for long term, so like 5-10 years. But you can do short term as well with non-blue chip stocks. So I think 3,250 will be reached Monday morning, New York session. Wall Street will open up 3,250, and then the next level will be important, 3,400, and then we'll get 3,500, and then bada bing, bada boom. This is gonna happen because the economies are opening up. People have a lot of money. If you believe it or not, the people that were working, right, or that were working from home, they have a lot of spending money, right? It's the first time where a lot of Americans have a lot of cash on hand, and spending will go crazy as people try to salvage the summer. And so I think this thing will drive up to 3,500. So that's it. So that's today's session. We have another free one on Monday. So that's that. For those that are interested in joining all the sessions, so we don't have a free one Monday. My fault. We are only holding free sessions on Friday from now on. The rest of the week is for the paid members. If you're looking to become a paid member, let me just show you what you're gonna get. So we have many packages, but at the very minimum, what you're gonna get is all my live sessions, right? So these sessions Monday through Friday. You're gonna get full access to the VIP lounge. Okay, you're gonna have Elliott wave analysis, Genius Band, which is price action, and just a combination of other strategies. You can have me, so you can have my signals, my major minor analysis. You can have Institute Trader signals, his chat room, and he does live sessions as well. This is smart money concepts. You will not find this on the internet. You will not find this information on Baby Pips. Okay, the content he teaches. Then you have chat rooms for separate majors and minors, keep things clean. You have member questions, and then you have all these bad boys. These are about 10 to 13 providers of signals, right? Tipsology, smart money, Forex standard. This is our gold strategy. We have price action, Ichimoku, all these signals here. And then we have our separate gold and oil channels. And if you're looking to get this, all you have to do is go to forexlens.com. You go to Forex Trader Room, click Get Started. And then what you do is you choose your package. So for example, the apprentice is per month. And if you use this coupon code, you will get 50% off. That's right. So instead of the coupon code is FIRST50. So instead of this 147 here, you will pay $73.50 for your first month. So all you do is fill out this form, click next. You'll see a button called enter a coupon code at the bottom. You enter this bad boy, you get 50% off your first month. So if you're looking to try us out and get on all this content, I mean, this is a lot of content. Not only are you learning price action live, you're learning smart money live. Not only are you learning live, you're also getting 10 to 13 signal providers that are very consistent, so you always have a trade to enter. So use that coupon code. Hopefully I see some new faces on Monday. I hope you guys have a very, very good weekend, and you guys are safe. And that's it. So peace, and I'll see you guys on Monday.